One of the most frustrating things in trading is constantly taking the right trades, picking the right direction, but you keep getting stopped out at break even. Now, going break even is not a bad thing, but we need to make sure we do it at the right times that actually make sense. So we find that balance of not missing out on really good trades, but also not losing on trades that end up incorrect. So today I'm going to show you a method, a system, whatever you want to call it, for how to avoid this happening, how you can capitalize on trades that you worked hard to identify so you don't end up missing those profits. Stick around to the end. It's going to be value packed, banger video. I really hope you guys enjoy. Like, subscribe, let's get into it. All right, so I'm going to be breaking down this trade I took on GJ on Friday, and I want to show you guys, as you can see, I ended up getting break even. And I want to show you how I could have avoided this, how you can implement this into your system. First of all, I want to talk about why we go break even and how we can then use that information to identify the best areas to actually go break even and the best situation. So the first reason is obviously very simple. It's risk, right? We want to manage our risk. If we are constantly getting trades where we get a good entry, let's say we entered short in a position right over here, we have our stops up there, and we push sort of 10, 5, 6, 7 pips, whatever. And then price reverses, we don't go break even, and we end up getting stopped out, okay? The other reason, let's say there's a level here. There's a previous level of support over here. There's some noise where prices rejected in the past, okay? This leads on to our second area, which is gonna be psychology, right? If we're constantly taking these trades that give us that initial push, but then we end up with a loss, that sucks. It's really bad for our psychology, and we're gonna take stupid trades if we're constantly taking the right trades, but we end up losing, right? So those, for me, are the two reasons why we want to go break even and why break even is a good tool for me in my trading, right? But there's also two reasons why going break even is extremely hard. And the first one is volume, okay? We don't always know with exact precision when volume is going to kick into the market, right? Ideally, we obviously want to see price pump down. We want to see that volume kick in. We want to see price push down, but that's not always going to happen. You can increase the odds of this happening by trading pre-London, London, pre-New York, and New York, sometimes even Asia, where you're likely to get those volume pushes. But even then, you're still going to get times where the market is going to move in pullbacks, which is how the market moves. It's always going to come back and grab liquidity if there's no volume, right? So we're often going to see price pull back and then continue, okay? And it's going to grab some highs. It's going to retest previous levels of resistance back here. And then we're going to get stopped out at break even because there was a level here that we went break even and we get stopped out, okay? So that's the second reason, is liquidity pullbacks. That's just how the market moves. It's something we can't avoid and we need to deal with. So knowing those two things, volume and liquidity, what do all of these have in common is that if we can find structure in the market, whilst taking trades at the correct time, then we can have that very, very good chance of continuations. If price can respect structure on any time frame and we have direction, there's a very good chance, I should just add in here, bias. So if we have bias, we took the trade initially because we had the 4-hour closing below or the hourly closing below, and you'll see that in this trade. And we have structure on the lower time frames where price can respect, where we can have trust that because we have the bias, because we have volume, and because we have direction, there's a good chance prices may pull back to that structure, but it's going to respect it and then continue. So we don't need to be too hasty on going break even and missing out on those profits, okay? So these are the very key things we need to be thinking about when we're going break even, okay? The goal ultimately of break even is we need to ask ourselves, when does it not make sense for price to reverse, right? When does it not make sense for price to come back to our entry and reject? Because that, when it doesn't make sense anymore, is when price is going to reject, okay? So knowing all that, let's break down this trade. We're going to start off on replay mode over here, just so we can build a picture of how this trade was actually taken, okay? So first of all, if we look at the 4-hour, let me just get rid of all of this. We can go back one more candle. Okay, so this is the pre-London 4-hour close. We can see we open at 1 a.m. Eastern time, so we can expect volume. And already, what can we see based on this 4-hour? We can see we created structure, created resistance, respected that resistance, and then we closed below the previous support on the 4-hour. Okay, so we closed below previous support, pre-London candle, what can we expect price to do? We can expect a pullback and a continuation. We have clean range to the left. We have a nice area for price to fill, at least fill these wicks, which is 20 pips, right? Then we can go down to the hourly time frame and we start seeing, okay, we have more evidence here that we have that bias, that price is pushing bearish. We have 1 hour breaking support, closing below support. We have a nice wick fill over here. And remember, if we think back to the 3 things we look for is structure plus bias plus volume, right? And if we think about it, we have structure, price is holding support. We have bias, we have that 4 hour closing below, hourly closing below. We have volume coming into pre-London. It's still quite early now, but by the time we take the trade, we'll have that volume, that high probability of continuations. Okay, so if we go down to the 15-minute now, we can start seeing how this 15-minute is gonna work out. So we have some 15-minute support down here, which we can move to down here because we're not going to take a trade, and we have some more support down there. Okay, so this is what we're working with here. Hourly close below. Let's see what happens. Okay, so this, we got the breakout. We have clean range, the level we planned. We have a nice wick fill, 7 pip wick fill for price to continue down and further down potentially. Now we need to think, okay? We can enter this trade if price creates a top wick and then flips to fill this wick. Now, my plan was to go break even at this wick fill, right? Because if we can see price fill this wick, there's a good chance that we can continue. If we reject off of this wick, there's a good chance that this could be a pullback and we could start grabbing liquidity to the top for then price to continue later and we take the break even, it's fine, okay? So as you can see, if we go down to the 5-minute, we have some structure forming, we have a nice pullback and we filled the wick. Okay, so we filled the wick and this is where I went break even, right? This is where I went break even. And looking back on it, if we think about how we can better manage this trade, right? First of all, we have some structure here, right? We have this 5-minute structure where we created some support, some resistance, we broke below and we closed below that level, right? So thinking about the question we asked ourselves at the start, when does it not make sense to keep holding this trade? The logical answer would be if price starts breaking above these levels or closing above those levels, okay? So the better option here, in hindsight, it's extremely easy. The better option would be to trail our stops to above this 5-minute level, okay? 3 pips, let's give it 3 pips, give it a bit of room, let's see what happens. We can also go down to the 1-minute time frame and we can start seeing how price is reacting to this 1-minute time frame, right? So we have a structure here. There's no need to go break even, right? Because we have a structure. We can accept taking a 3 pip loss instead of just going break even straight away, right? So you can see how we're using all the different time frames to try and identify the 3 things: structure, volume, and bias. We already have bias, we already have volume, and we now have structure. So that going break even doesn't make sense here, right? Going break even doesn't make sense because there's a very good chance price could wiggle around here for a bit and then continue down, because we can have trust in our high time frame analysis and we can have trust in this structure to hold. And as you can see, the smack down. So yeah, that is essentially the way that I'm trying to improve my break even system. When we have structure, we can sort of go mental break even. And I don't know if you guys know TradeSharp, he showed me this method, very good method of going break even but mentally. So you can look at structure, how price is reacting to this structure on the lower time frames, because you have that trust in the high time frame analysis. If price now starts breaking above here, if we do a bit of a imaginative scenario, if price starts breaking above here, closing above here on the 1-minute time frame, does it make sense to hold this trade? No, you've already filled the wick. Now you're rejecting, you're breaking previous structure. It doesn't make sense to hold this trade. But if price starts pulling back to entry, does it make sense to hold this trade? Absolutely, right? It's unless we start breaking above this structure, there's no reason to be so aggressive and go break even right over here, okay? So yeah, in summary, really all we want to look for is identify our trade, identify where we want to go break even, whether that be a wick, whether that be a previous level of support or resistance, and then scaling down on the timeframes to try and see if there's a way we can stay in this trade without going break even and it still makes sense. But it's a very fine balance trying to find where those levels of structure are and where it's good to go break even and where it's good to give it a rest, relax a bit, and let the trade breathe. So I really hope you guys enjoyed. Please feel free to ask any questions. Really, this is a massive, massive tool that you can implement into your trading, and it's helped me so much.